All right, guys. So this is going to be a video on the two options plays that I did make and didn't make. So I'm just going to kind of show you what I saw and how I entered and exited the positions. Um, and then, yeah, I'm just going to kind of review exactly what I was looking at. This is going to be a very, very short video. I want to just kind of get my thoughts out here while I have it all in front of me. So I'm just going to record a bunch of these videos, schedule them out over the next couple days, and yeah, just go from there. So, all right. So what we're looking at here, I think if you guys even watched the first video at all, it was like a full synopsis of E-Trade Pro, how it works, what I'm looking at. It's not really a full synopsis. I can't really give you a full synopsis, and I don't know. I think that video was only 30 minutes long or something like that. So what I was looking at here was Starbucks. So we have the ticker SBUX, Starbucks. If anybody else out there is like me, love our Starbucks. I mean, I have a espresso machine here. I have all the different coffee machines at the house and everything, but still love going to Starbucks as just like a routine type thing. I mean, I'll probably go a couple times a week. It's not an everyday thing, but it's just nice to get out of the house and to have some Starbucks, right? Everybody loves some Starbucks. I assume if you don't, give me some hate in the comments. I'll take it. If you guys are more of a Dunkin' Donuts people, I've been there, done that, but I just think Starbucks is much better. So let's bring up the daily here. Let's look at a 5 year. Let's throw the 200-day on here as well. See, I like looking at the full picture, and let's take the 200-day off. So we're going to look at a 20-year. So this is first just looking at Starbucks as a whole. So I guess we'll call this video just something about analyzing Starbucks or yeah, something along those lines. But I'm going to take you through a specific options play that I was flirting with, and I got a lot of FOMO because I wasn't able to execute my trade. And yeah, I'll just show you guys exactly what I was seeing here. So, all right, so you look at a 20-year, right? So we got from 2004 all the way up till today. Great stock over the years. If you bought back in 2008, $5 a share. That's crazy. Sat in this consolidation level right here from 2015 to about 2019, give or take. That was at $57. And then a lot of movement up through here during COVID. Came back down, tested those levels. And now we're sitting back here at these levels again pre-COVID. So this actually does look like a really good chart from a 20-year view. So now what I like to do is just start chopping these down into the lesser time frame. So again, on the 10-year, still looks good. Just gives you a little bit different picture. I don't need to look at it there. 5-year. Okay. So what we're seeing here, so what you saw different from the 10 and the 20. The 10, you heard this in the last video. The chart is going from the bottom left hand corner to the top right hand corner. If the stock is going from the top left hand corner to the bottom right hand corner, that is a declining stock. At least for that current time frame that you're looking at. Again, so like I can bring this to the 50-day. Now this looks like a declining stock, right? But if you come back to the 10-year, it looks like a great inclining stock. So we're gonna just look at a 5-year. So this is a great depiction here for us to take a look at the 5-year. So what we're seeing pretty much, and you're looking at the ranges, guys, right? So you're not taking these exact numbers. You're not taking 64. You're not taking 95. Yeah, okay, great. It's been up over the last 5 years from 64 to 95. But I'm looking at this movement from left to right. It doesn't have a directional movement at all. Yes, it might be a little bit pointing in the positive direction, which is great. That's a great thing. But what you can see here is a lot of what we call chop. It yeah, it's moved. It's moved from $70 up to $120. That's phenomenal. That's great movement, but it came right back down and now we're sitting here as well. So there's not much change in price action on a 5-year from where it looks started on the 5-year and from where it is now. Yes, again, over the time it had a lot of fluctuation, but looking from a left to right, corner to corner, you're pretty much seeing it sit The middle of this chart is right at 90 bucks. So, I mean, there's not a lot of movement, but this is a good thing. That is what we're looking at here. Is we call this sideways price action, which means that this stock is going to should theoretically have a decent size move down or a decent size move up in the near future, especially seeing this same. So let me now break this. I'm going too far, but let me just break this down to a year. See if 2 years even look at. Let's just look at a 2 year. Take it from just 23 to now. There is a lot of sideways price action, and then it's hit a lot of these volume levels. See that this area here, it hit this volume pack, it hit this volume pack. So this is a lot of sideways action. So now we can also assume from this 5 year that we're assuming that it is a sideways price action, that there's been a lot of sideways price action alone in just the last 365 days, and a little bit more than that since the start of 23. So we could assume another large move down back to these levels back here to test these levels here at the 74 range, or back up to test some new all-time highs, right? And so this is where you start using some of the studies and the tools that we have inside of here. So you can first take your 200-day. Talked about this in the last video. Your 200-day simple moving average gives you a very, very good idea of the direction of the stock. Again, this has been moving all over the place. This is positive. This cut through. It broke the 200-day, broke down. There's a volume pack right here. It was testing the 200-day. It picked up again. So now what is it doing here? It broke back down below the 200, and now it's trying to flirt with it again. It touched it. It's trying to break back up. If we can see it break back up and stay above it again for extended period of time, that is a good buying opportunity. And we would say that is very bullish. Okay. So let's bring it down to a 3 year now. I think I already did that 2 year. So what I do, guys, once I look at a 5, I get right into it. Okay. So let's actually put this 5 year up. See, this is again, all you trolls. I won't call you guys trolls because hopefully you guys are just learning for value and not here just to spam me and to troll me. This is how I'm going to at least first start my Fibonacci retracement from here. Your high to your low, and that does give you a pretty good indication of where this is going to be drawn out. And let me see if I do another one. Yeah, it's going to give me the same exact stuff. So we're going to remove that one. Okay. So what we're also looking at here, and then we can add the 200-day back on. So we are looking for this price movement to stay inside of the 50%. So it's touched here. If it breaks down here, we're going to see it move back down into this 38.2% fib range for us, which not ideal because we're expecting this is going to be a bullish. We're looking at this chart to be a very bullish long-term positive stock for us. So yeah, testing out the 200-day, it's staying above the 50. We have some volume pockets right here. Again, I'm not gonna use the fib right now. I shouldn't even be using the 200-day. I should be showing you guys what we came here for, and that is the options play that I found. So we're going to bring this down even to a year. That doesn't look great, right? Then we're going to take it down to a minute, and I'm just going to pretty much look at this 14-day right here. So what I was looking at were pretty much weekly options. So you have weekly, monthly, and yearly options. These are all these option chains that are up here. You can go pretty far out. The further out you get, the more expensive the option is going to be because you're pretty much paying for time is what you're doing with options. I need to do a whole separate video on options, theta, all that stuff and how they work and everything. What I was looking at here. So Starbucks, and I'm not even going to get into the Starbucks earnings of what they reported, if they did good, bad, whatever, because sometimes the earnings for companies will come out fantastic and the stock will go down. Sometimes they'll come out terrible and the stock will go up. So I'm not going to get into that in this video. Again, I will do more real-time videos and talk about that kind of stuff as we get this channel built up a little bit more. But for right now, we are just going to look at price action only. So let's try to give us a little bit better view. That was about the best view that we had right there was the 14 days. So we're just going to go back. I wanted to give you guys a little bit more history back here and to show a little bit more of the price action. But this, honestly, for this purpose, it was fine. So what I was looking at here is, again, excuse me, all earnings aside, whatever Starbucks reported, what happened to the stock? Well, what happened to the stock is earnings report came out on Tuesday of last week, and the stock pulled up at first. I remember this happening. It looks like it pulled down first, but it definitely pulled up first. It pulled way down, and then it pulled up. And so the reason you can see this is extended hours is what it's called. So if I turn off extended hours, now all you see is where the stock stopped trading at 4:30 Eastern Standard Time. You see extended hours when you turn that on, and you can obviously see that on Google and things like that. But a stock is still moving for a period of time after the stock market closes, especially when there's earnings reports. The stock is moving pretty aggressively. So as you can see here, on Wednesday morning at 9:30, the stock opened way up from, it was at 94 and it was way up to 98. All it did Wednesday morning was drop. It came pretty much back to where it was. I like seeing extended hours, right? It gives you a little bit more idea. So that's why I turned that on here. So again, all earnings report aside, I saw this as a positive because the stock wanted to go up. It wanted to go up and it hit some resistance. Maybe the earnings, again, I'm not sure. The earnings probably were bad and that's probably why it came down. Or the earnings were good and the market just moved this way. I am strictly looking at price action for this. So came back down. We're going to pull it back out to the 14. What I'm looking at here is consolidation in these volume packs. The terms that I keep using is volume packs and consolidation. So if you hold your little cursor here, you have this 91.92 level. And I'm grabbing that from pretty much the bottom of here. I could go even lower, 91.70. Look at Monday, this Friday, and this Tuesday. They all stayed pretty much there. They didn't go below this level, even over here. So there's a lot of volume. See how pretty much it looks like if I draw my line right there, it looks like all of those days bounced off of that line almost perfectly and popped right back up. So that's saying that there was resistance there. Starbucks wants to go higher. It already showed us that it wanted to go higher, right? So what did Matt do yesterday? Well, Matt was looking at the Starbucks options chain over here. And we saw it. We're going to cut this down to a 5. So we still have the price action here. So it was yesterday morning at 9:30 once the stock market opened. We were looking for something in the 98 range because that's where this moved up to. As I said, okay, well, it popped up after hours up to 98. Why can it not go back up to 98? This is a great opportunity here. So let me bring it back down to 5. So what I look for, it was at that time, it was, yes, February 6th. So I like doing options that are at least 2 weeks out. These are expiration dates, right? So the 2 weeks mark would be February 16th, 3 weeks would be the 23rd, 4 weeks would be the 1st. So I would like at least doing a February 16th. And these are called weeklies. This one's this week that's going to expire on Friday. They always expire on Fridays. So I was looking at these, but I don't know. I don't remember exactly what I was going through, but they didn't look enticing to me at all. So I got over here to Marches because that's what it was. I wanted to have some time. If you give yourself some time on these options, you not only get I'm going to use my real estate terms. You not only get some equity and what it actually is time. I think it's either theta or delta. I don't know. One of you guys will correct me. Whatever. I don't look at that stuff. I just don't. Because again, I'm not an options trader as much anymore. I am a long-term investor, but this is a video that we're going to just be doing on this just to put some more content out there. Okay, guys, we got to trigger the algorithm. So I wanted at least a month on it. I want to make sure that if it started moving in the wrong direction, I could get out immediately without losing that much premium. Actually, I call it equity. They call it premium on the options chain. And so if it moved back down, if it broke these levels, that 91.75, I would have sold out immediately. Yeah, I would have bought it for whatever it was at the time, and then I would have sold out of it because I had a month on it. So that's why I wanted a month here. The options that I was looking at, so these are the strike prices. Strike prices are the price of the stock. So they go down and they go up, right? So you have, and so what you're looking at, the ones in blue are called in the money. That means the stock is currently trading at that strike price. So what you're looking at here, you have calls and puts. Calls are you are expecting the stock to go up. Puts are you are expecting the stock to go down. Okay. Not even going to get into the larger details of options, of selling calls, selling puts. We're just going to talk about buying and selling calls and puts. We're just going to be buying, okay? We're not going to talk about selling them because the opposite, it's the inverse, whatever. We'll deal with that later. So I, again, was expecting this stock to go up to about 98. At least that was my price target, right? If it made it up to 96, 97, I'd at least, these options would move in the right direction. I'd make some money. So again, at 9:30, let me break this. Let me get this to 3 days for you. I was looking at these 98 options. When you click on the actual strike price and the option, I was looking at a call, it will show you where they traded at for those days. So like even if I go back 14 days, they'll show you where they are at. And that's actually what I was looking at. And then what I can also do here, SBX, is I can overlay the stock. See, it just gets so messy. I don't really love this too much. But as the stock, let me take off extended hours. This stock, before the earnings report happened, before the decline, these options were trading at $180 a piece. So 1.8 is not $1.80. That's $180. So if you look at something that's 16, like this one right here says 16 cents, that's $16 is what that actually means. Okay. And you can buy as many as you want them, whatever you want to do. So before the earnings call even came out, these were trading at $180. $180 a piece. Look at, like, they were so high. Like people were expecting. So that's what happens when you have an earnings call. People are expecting the stock to move in one direction or another. So these premiums get jacked up, and you can see there's a huge inflation in prices right here. So I was looking at this. Let me remove this so it's not so confusing. So I was looking at this and I was like, holy shit, 180. They came all the way down to 23 cents, $23. So I'm buying them at a $150 discount, right? $150. Just if the stock goes back to where it was, they wouldn't hit 180 again, but because you lose time, guys. That's what I'm telling you. So over this period of time, that's why these decay. And that's why I don't know if I said it in this video or the last video, but 99% of options go to zero, because if they're not in the money, they go to zero. And when they are in the money, they turn into shares of the company. Again, I'm not going to go into any of that right now. We're not going to talk about all that. Okay. Another thing pop up. Okay. So I was looking at this, and so what I was doing is I said, okay, shit, they were up at 180. I want to try to buy them for 20. They were there at 23. The spread was 21 to 28. And so I was putting my prices in at $23. I was trying to buy like 10 of these boys. So I was like, even if it moves up a little, I can easily double my money. Like that's gonna definitely it's almost definitely gonna happen. Like the stock, just let me bring it up over here so you guys can keep reverting back to it. The stock was there. It was there. Like all it has to do is come back. Okay. And this is us saying, okay, we didn't see this huge price action. I'm trying to get you guys in the mind frame of where I was. So what ended up happening is I put my orders in at 23. I let them sit there, This was at 9:30. So look at my cursor down here, 9:30. So a couple people bought them at 9:30, 9:35. Mine was at like 9:36 or something like that, 9:40. And I just couldn't get them at 20 or 21 or 22 or 23. And what I ended up doing is I walked away to go make myself breakfast. And when I came back by 10:15, they were already double the money. They were $42. And as you can see this, I mean, it just started, turn extended hours back on. It started going. Like it just started, it was bouncing around at the beginning of the day, and then it just started absolutely just going, just launching. Um, Actually, that was right here. The 10:15 mark was right here. Let me get this a little bit. Turn these off. So it's actually right here. So it pulled back up. It was actually right around here, the 10:15. This is right where the options started flying. But because the stock was moving up, that's why I couldn't get filled at $23, 23 cents. It is $23, but we call it 23 cents. And we call these $1.17. We don't say 117. That's why I couldn't get filled, because the stock was moving in a direction that was making the prices for these options higher, and I was trying to bid such a low price. So it just wasn't working in my favor. I should have tried to buy them at 40 here. Whatever. It is what it is. So long story short, guys, could have turned that 20. I think I was buying at least 10 of them. So I was gonna spend $200, something freaking very, very minimal like that. And then they ended up selling the peak of them. It looked like one of them sold today. No way. One of them sold for 98 earlier today. Yeah, it did, because it topped out up here. So they almost got in the money. The stock went to 96.60. That was very, very close to in the money. So you click back on these. So yesterday people sold them out. So they went from 21 up to a high of 70. So you triple your money there, right? And then if you waited even until this morning, yeah, the stock's like, I mean, if you look at it, yeah, the stock, it came back down, but it's sitting there. Guys, this could still be a potentially a great, oh man, I might have to look at. I might even just buy these again, because if they even come back, I might add another date on them. 98. See how they get more expensive when you add more time on them? But again, if you look at these from a couple days ago, yeah, these were only 35 cents. So it's just a great, it's still sitting in this range. So see how it hasn't broken back down? It's sitting up here. I really think Starbucks is gonna continue to move upwards towards that $98 range. But that is a quick depiction of Starbucks and what I was looking at for options during their earnings call that happened last week, and how I saw the stock possibly moving these last couple days. So I hope that was helpful. I know I kind of move fastly again. I'm going to keep saying that in these videos, because I can feel the passion that is just oozing out of me when I'm talking about these things. So let me know if that was helpful. Again, I'm going to do some more. I have a Palantir option play that I was actually in. So that Starbucks one I was never in, but this Palantir one I was actually in. Just give you an indication. I had 23s and I had them at about 56. So again, another double your money opportunity. But the challenging thing for me here was I bought the 56s. I bought them like back in December. So I rode them all the way down to almost freaking nothing. And now they're popping again, because they're soaring. So I can do a video on this one as well, but that's Starbucks, at least, guys. We will start there. Let me know if you have any questions. Subscribe, hit the channel, find me on Instagram, Twitter. Let me know what you guys think. I'm going to keep pushing these out there. And yeah, thanks for watching, my friends. We'll see you later.